Hey there, internets. This is Kyle, coming to you with another edition of the My Business Launch Secrets YouTube channel. Today, let's talk about the money, the cash money, because obviously the number one, or as some would say, the only reason a business exists is to make the owners money. So with that, hope you're all doing well today. I'm recording this a little bit early in the morning, following the one I did yesterday, which was in my car. Fortunately, yesterday evening, after taking care of the kids and hanging out with the family for a little while and went out to eat, all great. I came home once I got the kids to bed. I just ended up crashing on my bed and passed out and woke up at 5:30 this morning to try to get to work and get some things done before we head out for a little family trip for a long weekend, I guess it is, here in November. And so today, real quick, before we head out from the homestead, and I hear kids screaming in the background, so I've got to make this a little bit quicker, but I wanted to still get something posted up here to, again, keep myself moving forward a little bit more each day. Still hope to make some progress over this weekend, try to spend a little time in the evenings after the kids are bed, after long days, vacation stuff. Try to make some more progress on my funnel over the weekend. Should be able to get that mostly done, I think. I mean, there's only a handful of sections I need to do, and then I need to come up with the order page, which shouldn't be too difficult, and be sure all my payment account information is loaded up and hopefully get it functioning before, let's say before into next week at least. Should have it up and running, I think, because I'm getting a lot closer now. Let's see. Today I did spend a little time thinking about revenue and revenue forecasting for not exactly, I guess, the current plan of what I'm doing, but more or less it's pretty close in terms of if I were to just initially go with offering my kind of base level membership program, which is the funnel that I'm setting up to sell people on. If I just offer that, because I had come up with a model that included like my diamond level membership, which would be, more expensive, and then also for like an inner circle type of activity, which would be like a high ticket coaching program. But I know it's going to take some time before I can roll all those out. So I just wanted to know, like, hey, what if I only just focused on doing this newsletter membership thing, and if that's like how many people would I need to get in that stream of the revenue in order to get to $1 million ultimately, but just kind of getting a feel for, like, in general, how many people to get a pretty decent amount of monies that would allow me to quit my job, which is obviously a big motivation here for me personally. So let's take a look at that. We'll dive here into Excel. I will also preface this by saying I am an engineer. I like to look at the numbers and do a lot of plotting and scheming in terms of forecasting and projections. So apologize if that's not your cup of tea, because that's what we're talking about here today. So let me drop that down. So boom, got tons of numbers, which I'm sure you can't see on your tiny phones that you're watching this on. But more or less what you kind of have here is a look at various inputs on this side in the orangish box, I guess, and then ultimately the summary of all the outputs is up here on this side. As you go down the page, this is just like a month by month breakout of various factors that I'll go through here in a minute. And then the money chart is over here on the figure showing, again, that's just projections, annual revenue, and annual profit. So I'll go into the numbers that I used to get to these metrics. I was specifically trying to figure out how many I needed to hit this $1 million mark in year one in terms of revenue. And so obviously that's what you see here with the blue bar. Orange bar is actually profits. But, one thing to keep note, which is this is a typical thing for any business, is you always hit some plateau based on some fixed input parameters, because you have to assume I am acquiring a certain number of customers, but also you are losing a certain number of customers every month. So at some point, as you grow, those numbers will even out, and then you'll just plateau, because essentially at this point, the number of new customers you've got coming in equals the number of customers that are leaving or canceling your membership. And so you're at net zero month to month in terms of acquiring customers. So this is just a different way of looking at that. Cumulatively, well, no, this is still annually, I guess, or month by month here on this chart, showing again how that plateaus as you move out. So this is a 10-year projection that I came up with overall. Okay, so let's talk about kind of what goes into this specific model, which again, this is one really just for, there's some extra stuff here that no longer applies really, but I baked it into a different calculation I had done for looking at other factors, but blows a little more. Okay, so you've got some membership per month costs, so that, or price, I should say. This is the price I'm planning to charge, $47. This is just looking at what is that over 12 months. That's $564. Diamond membership, we're going to ignore that. Inner circle costs, we're going to ignore that because I'm not accounting for those in these calculations. Those are the higher tier options in my value ladder. So, I mean, I have notional prices here, as you see, but I have enrollees per cycle 0 on that. And same for Diamond. Okay, so membership churn. So this is a very important metric. You need to understand what percentage of your customers are canceling or leaving every month. Typical well-running businesses, I think, are in the 2 to 3% sort of metric if they have good product and good customer service, etc. It should be fairly low. I mean, if it's like up to 10%, that's kind of considered fairly bad. So I just threw in 5%. I mean, who knows what that'll be? I don't know. Again, this is a brand new product, brand new thing. Maybe people hate it, and that number will be a lot higher. Maybe people will love it, and it'll be a lot lower. We'll have to see. Membership enrollment cycles per year. So this is something I baked in where I will probably use at some point, but right now it's set to 12, just meaning that every month I'm getting new customers. But ideally what you want to do, or at least what I've kind of read about how some people do their membership programs, is not having it open year round, but having it only open for certain periods of time, and whether that's once a month or every other month or once a quarter or even once a year. The point of doing that is it forces some urgency and scarcity into your offering, because if you're saying, well, here's my offer to join my membership program today, you have to act now because I'm going to close the membership, whatever, in a week or 2 weeks. So you need to sign up now because this particular bonus offer is not going to be available the next time we open this. So again, I do think that's a good long-term strategy. I don't necessarily think I want to start off by doing that, just because again I have no clue in terms of the actual interest here in my particular membership. So don't want to put that constraint on it, and I think once I start to see what the level of interest is, whether it's great interest or zero interest, I'll obviously have to tweak things accordingly based on the feedback I get. Okay, so the new gold members per cycle. So this is a number that will obviously change everything pretty significantly. So this is a number I was just playing around with to get to the $1 million annual revenue, which is over here. Obviously, you'll see if I change this lower, then obviously it's going to impact your revenue projections overall. So let's just go back to 330. So this is assuming I can get 330 new people to sign up for my membership every single month. is what these two numbers tell me together. Diamond members, again, I'm not including that here. Okay, CAC, the cost to acquire customer. Of course, very important number to include because, yeah, this is not going to be a cheap number, most likely, especially for somebody like myself that has no customer list. So I'm going after cold traffic to sell my thing, so that this is like lumping in the cost for your advertising and however else you're planning to get your customers. That's a number that you will want to pay close attention to. I put $40 in here. Again, I kind of have no, I think that's like a reasonable number, but it could be, I don't know, it could be 50, it could be 80. Again, initially, maybe, and this again, really, it does depend on your offer, on your classic hook story offer from Russell Brunson. If you have a really good one, then this could be lower. If it's not so great, then that could be a lot higher. So I will obviously be paying attention to this once I get things launched. So then you have your costs per your newsletter. So I don't know. I think $4 is somewhat maybe reasonable. Well, I don't think it'd be a low side because it's just a 8.5 by 11 printout. The example that I've used, Marketing Secrets newsletter. This isn't anything super fancy. It's just, it's color printed, so that's nice, but it's just printed out on, large paper bent over and stapled in the middle, right? So double-sided. So I have to cost to print this thing plus the cost to ship it is baked into this $4 per there. Cost per premium. So this is any of the initial sort of bonus stuff I would provide up front. And of course, really just accounting for the physical products, which, as I mentioned, will be t-shirt, notebook, and there will be like an initial, I think, like welcome letter, newsletter thing, and maybe one or two other things. It will just be like paper copies of stuff that I'll throw in the box. Potentially getting a custom box, which that's a whole other thing I have to still look into, but anyway, so the cost of all those products plus the cost to ship that thing to the customer. So I've got that marked as like $30 per, which if you're keeping track at home, $30 is how much I'm charging people to sign up for this, quote unquote free offer, right? So let's try to keep that even. So I'm at break even if they only take that option. Monthly fixed expenses, $500 a month is what I've got currently. This is again based on the fact that I'm paying nobody else to help me. This is all me, so I'm not paying like for admin assistance or anything at this point. So this is only accounting for like the cost of email services I'm using, Google Business accounts, my accounting software, ClickFunnels, which I pay in advance, but that's still technically a recurring cost. And then any other just like services that I might be needing to pay for on a month-to-month basis is more or less all that's baked in there. So pretty low at this point. Obviously, as this thing scales, I would look to hire somebody, and then this will go up pretty significantly, and so my profits will go down. But that's a problem, a good problem to have once I get lots of customers, which will be good, and happy to deal with those headaches as I have them. Expense monthly growth. So this is just assuming that every month this $500 will grow by some amount. Inflation. I should probably have that at 10%, but anyway, 10% is the annual inflation number, so monthly will be less. Yeah, so those are all your input parameters there, and then so basically the spreadsheet just goes by month and does the calculation of every month I'm acquiring a certain number of customers. In this case, it's 330 new customers for my gold membership. Highlight that. Where's my freaking scroll bar here? Okay, yeah. It's got 330 new members, so they'll bring in. Now this is not quite accounting for the fact that I'm charging only the $30. This is actually calculating the $47 a month recurring revenue, but I mean, I didn't want to get into the details of splitting that out, but I guess I could. So this is just saying $47 times the 330 is $15,000. Okay, so it's not exact, but it's in the ballpark. So that's your recurring revenue and total revenue are the same in this case. I haven't also accounted for the fact that I plan to do an upsell, I guess, after if they say they want the free offer, the upsell would be, hey, do you just want to go ahead and lock in a fantastic rate for the annual subscription for this newsletter, which is whatever, $397 or something. So I've not baked that in here. Of course, if I do that, that means my monthly recurring will go down if some percentage of people take that upsell, but it will give me more money up front, which would be a good thing. So you got your monthly fixed expenses that's tracking. Again, you see that number going up every month to account for the increase. Expenses, you got your CAC, cost to acquire a customer. For the same number of customers, that number stays the same. Of course, that'll probably go up as well over time, so I haven't quite accounted for that. New enrollee expense, so again, this is the cost to send out that initial premium bonus offer stuff. The newsletter expense every month. Processing fees, another important factor. You're going to pay the dudes who are processing your money for you, so that's usually about 3%, 2.9%. Fee that you have to pay to Stripe or PayPal or whoever you use. So finally, you got your total monthly expenses, your total profit, which is, of course, your revenue minus your expenses. As expected, up front, I'm net negative because of the fact that once you add in those premiums plus the cost to acquire the customers, initially you're going to be negative so if I'm saying $40 to acquire plus $30 for the premium, so that's $70, and they're only paying me in this model $47. So I'm behind $27 or something, $25 for each customer initially. Now, of course, then they're going to pay me the second month, and the second month my only expenses is $4 or $5 for the newsletter. They're paying me $47. Thus, I start to profit goes up pretty significantly from there. And then ultimately, it's just tracking cumulative revenue and profit as you go through. The net margin is another good metric to pay attention to. You see here I'm in the high 70s, which I think is good for an online business. I mean, this could be even higher. I think once I get the CAC, well, I guess the CAC won't necessarily go down, the cost to acquire a customer, if I'm established, but I guess you could conceivably, the cost to acquire brand new customers, I guess I could go down because once I have customers, then I might switch from I could maybe do less paid advertisement to cold audiences and then start reaching out to other people to leverage their audiences. Again, this whole Dream 100 concept for getting traffic. And in the, more or less like using influencers over their audiences, where if it was something as simple as going on somebody else's podcast, which I don't feel super comfortable about doing that up front when I have like zero basis to talk about anything, if I don't have any customers or anything. But at some point, once I have a solid customer base and I've tuned in what I think they're interested in, then I would definitely start to reach out to more people. And so that would, if I could get on a podcast, which probably wouldn't cost me anything, if I'm able to at least pitch people to, hey, if you're interested in the newsletter, go to this website, check it out. It's a cool free offer. Then all that traffic that would come is basically free to me. So if I could convert some percentage of that, you lump that in with whatever I'm still paying on advertisements, my cost to acquire a customer should go down over the cumulative basis of all the customers coming in. and then you plateau around 80% here in this model. So I don't think that's bad based on what I've heard from people I listen to in terms of net margin for a online, predominantly online business. Even though I do have a physical product essentially that I am selling, but it's an information product, right? It's not a product with a high cost involved. So that's I thought I'd just share that with you. I just spent some time this morning thinking about that, and obviously I can tweak that a little bit further to more accurately reflect what I plan to offer up front, which I might do that because I find that very interesting. Certainly don't get lost too much in the analysis of what you're doing, but I do think it's like good to have a reasonable understanding of what you might expect to see based on, again, you could set a number of potential conditions saying, well, if I only got 50 customers a month, like how much money would I have at the end of a year? Or if I only got 100 or 200 or flip it, if I wanted to get to 1 million, how many do I need to acquire every month? And so that's kind of what I was looking at. So yeah, so it's, hope that was helpful to somebody. And with that, I'm going to go get ready for our trip, and hope you guys keep kicking ass, taking names, and I'll see you next time. Peace.